if you want to live in a world that thrives within the planetary boundaries, we need to kind of reinvent almost everything, what we do and how we eat, how we produce energy, how we get around, how we live, how we heat and cool, all of that. And so the overall hypothesis is that in the future, there will be a correlation between the startup and ideas and innovation, which is significantly better than today's economy, and also the financial performance of those.
Innovations in Sustainable Finance, a University of St. Gallen podcast by Julian Köbel.
Hello, and welcome to another episode of Innovations in Sustainable Finance. The two big levers to solve climate change are 1, government policy, and 2, technological innovation. Today, we'll meet someone who is in the business of driving that climate innovation, Fridtjof Detzner, co-founder of the venture capital fund Planet A. Fridtjof is a very interesting guy. He founded his first company, Jimdo, a website building tool, when he was 16 out of a farmhouse in northern Germany. After a successful exit, he traveled extensively in Asia, even participating in a TV documentary all the while. And now Fridtjof is a venture investor with a mission to keep the planet below 2 degrees warming. Fridtjof, welcome to the podcast.
Thanks so much, Julian. Super happy to be here.
Yeah, it's great to have you here and talk with you. You are now a venture capital investor. Could you do that in any field, or does it really have to be about climate?
Yeah, you mentioned that journey to Southeast Asia, and that really shifted my focus quite intensively. So initially, I think it was a bit naive saying, look, traveling 120 days to Southeast Asia sounds like a great idea. Let's do that. And then we decided of taking 10 out of the 17 new sustainable goals as shells for each of the episodes. And if you want to portray the solution, you need to show the problem. And for me, as a prototype of privileged German, it was quite an insightful journey. And after that, I decided, look, I rather than building the next software company, I'd rather do something in that space of the problems I've seen myself. And so, to answer your question, it's like, I think I couldn't do anything else. I tried to do my part and be part of the solution, really. And I think when it comes to investment, venture capital is such an incredible, powerful tool. If you look to the US, less than 0.5 of the companies founded each year are given venture capital. If you look at the public markets today, it's 76% of the companies that have raised venture capital in the past. And so that, I think, tells you how powerful venture capital really is.
So you really had to see the issues before you found the motivation or the conviction that this is where you want to contribute.
Yeah.
Is it fair to say it was a turning point, that journey?
It was, and to be honest, looking back, the journey did the trick for me. And now sometimes look back, it's like, why did I really need it to have that journey and that experience? Because the problems are obvious. But for me, it was important because I think lots of the times it is this emotional connection to the problems which makes us humans tick and really then start to care about something. And so for me, that journey, was important to go down that path.
Can you share a specific example of something you saw that created this emotional trigger that convinced you, hey, this is really something I want to tackle?
Yeah, as you said, I co-founded my first company on a farmhouse in northern Germany. We did one episode about climate change in central India, and I did interview a farmer. And that farmer is north of Bangalore, and he had the third year in a row no yield, and he lost his crops either to drought or to flooding, to extreme weather phenomena. And like the seeding calendar that used to work for thousands of years just doesn't work anymore. And the overall sum of rain is still the same as before, but it was totally erratic in different times of the year. These weather phenomena appear. And since 3 years in a row, he doesn't have any yield. It was severely in debt. Mm-hmm. Now the sad part is like he was willing to take his own life. So his son and his wife could at least get some support from the government. And that was an informed decision. And that story is not one story. That area where we filmed is actually called the suicide belt, because you can draw the correlation between the suicide rate of farmers and the change weather data. Again, me being a prototype of a privileged German, also from a farmhouse, it felt like two worlds are really colliding on that rice field. And yeah, to me, that was hard to deal with that. And then obviously you step on your plane and then fly back to your nice flat in Hamburg or whatever. And it's really two worlds colliding. Yeah, over the course of shooting these documentaries for 120 days, like lots of these stories I've seen myself. And to me, it was also good because, I mean, if you're an entrepreneur, then you always tell your story and you do that. And being host of a TV show, it kind of puts you in different shoes, and you suddenly are the one, like you do now, asking questions, want to learn about the other person. And I think that was really, really good for me.
Thank you for sharing that story. It seems really a death of despair, or, luckily just prevented. But there is this book about deaths of despair also in the US. So it happens, and it's very sad when it happens. And it clearly is a strong signal that something ought to change. I also find it interesting. So people are sometimes, there's this flight shaming, so you shouldn't fly around, but you're somehow saying, well, it can be very powerful to go and see other places to really understand what this climate change issue is about. So it's not just, we have a few hot days in the summer and quite rarely actually a flood here and there. It is much more than that. So it speaks to me, sort of, to really understand the problem, you have to see the people who are really affected.
Yeah, I would say so. And we talk a lot about in negative terms of flying, which I think is super important. I still think also flying brings the world much closer together, and it's also one important thing. And we also need to think about how to decarbonize that part. I think it won't go away that we fly around, but obviously there are better modes of transport with less emissions, which are super important to support. But yeah, so seeing problems firsthand and exposing yourself to the problems, I think is important.
Or people do something like you that, once you've seen that, you try to bring it to many other people through documentaries and podcasts. So that's a pretty carbon efficient way, of course. Yeah, well, it really is, I think, right?
Yeah, it is. No,
telling stories. But, so then you decided, now I want to start a fund, a VC fund that is focused on doing its bit around solving some of these problems. So tell me a little bit about your fund, Planet A. Where are you at?
Yeah, there was one moment before where I met a really good scientist, and that scientist opened my eyes to life cycle assessment as a method to quantify the impact of a process. You really look quite holistically at products, processes, and you look where the materials are coming from, how much energy do you need for that, then how far they're transported, and yeah, you basically look at everything, how often the product is used in the end of life scenario. And that, to me, was an eye-opening moment where I've seen it put in action when in one startup I supported back then. And if you do the math, which is obviously quite complicated, but if you really do it, then you can judge if an innovation is really better than the standard process today. And as I just said, how powerful venture capital really is with the example from the US, I think in order to live up to its responsibility, venture capital, I think, should pay attention to the science, to life cycle assessment in that area. And from that kind of realization that this is not put into investment decisions nowadays, from that idea, Planet A kind of came to life under the belief that science is as important in the investment process as the business side. And that was a fundamental belief that has led to Planet A.
So life cycle assessments, the idea of really going into the details of a product or a solution and trying to quantify how much it is better or worse than an alternative is a guiding principle. And that, if I understand correctly, is a tool that you use to select of the many startups that you could support, which ones are not only worthy of your support in terms of their economic potential, but also in terms of what they might contribute in terms of solutions if they succeed. Is that right?
That's correct. I mean, if you want to live in a world that thrives within the planetary boundaries, we need to kind of reinvent almost everything, what we do and how we eat, how we produce energy, how we get around, how we live, how we heat and cool, all of that. And so the overall hypothesis is that in the future, there will be a correlation between the startup and ideas and innovation, which is significantly better than today's economy, and also the financial performance of those, because we really need to come and move forward where the better solutions also are more energy efficient, so they're also better off and cheaper on the long way. And for us, looking not only at the founding team and the business model and the market, but also kind of really deep down with the science to understand what's happening there, it gives us an additional benefit to judge what is really part of the solution. And that's how we approach it. And again, it's important to acknowledge that for us, the science team also has the power to veto any investment decision when you think, hey, this is not significantly better than how we operate today. And that is put also in the legal structure of Planet A.
So one thing that's worth mentioning is that you have already invested, right? This is not just an idea at this point. So maybe can you tell us about one of the companies that you invested in to make this concrete?
Really, we invest into, we have 24 investments made so far, and software and hardware, quite early stage across Europe. So that's how we look at the market. And just to name a few, there's, for example, one which is called C1 Carbon 1, and their quantum chemist has had simulated new catalyst processes for the production of green methanol. And the production of methanol is causing 10% of the chemistry emissions worldwide, so quite significant. But also green methanol based on renewable energy is a shipping fuel alternative for container ships. And the container ships itself, they contribute to 3% of the global emissions, so quite significantly. And so we need to decarbonize that as well. And the problem is that you can't do that with batteries because the energy density of batteries is much lower than synthetic fuel. So we kind of need that. Same in long distance aviation, that we need the energy density.
Mm-hmm.
So what they've been achieving is that new catalyst, which is immensely more energy efficient in the process, where you combine hydrogen and carbon dioxide to methanol, and that process, through the innovation they've been developing, it is possible that they can lower the pressure and the temperature in this catalyst process by a whole lot. So it makes the end product, the metal, much cheaper, and so it becomes much more of an alternative. And so that company is growing, and now they're building the pilot plant. And also Maersk is, after us, an investor in this company, and Maersk is the biggest shipping company in the world, already ordered 28 container ships with hybrid engines that can also be fueled with green methanol. Super good to see that this is happening as well and scaling. So yeah, kudos to that team for sure. That really bring this idea forward.
Very interesting. What was the name again?
C1, like from the name carbon.
C1.
Yeah, carbon 1.
Oh,
so
I see.
the methanol is one carbon atom and 4 hydrogen, and so therefore the company is called that way.
That sounds like a really good idea. I hope it works. No, it's amazing. Yes. And it's what I really like about this topic in general, that even though we started with a sad story, this is very exciting. So you can sort of say, well, yeah, there's not only doom and gloom, there's actually things that can be done. There are good ideas around. It is possible to do something. I think that's so good to know. So hopefully that...
Yeah, honestly, like that experience is like, I couldn't be more happy to now work on something which is part of the solution after that. And I think there's so many great people that not just want to build any company, they really want to build a company which is able to make a difference. And more people are choosing this path. And I think it makes sense from so many different variables, they're kind of reflecting all the privileges, but also, I mean, that's the biggest opportunity to build large companies and the next time. And so I think it's amazing to see the talent inflow in that area, really.
That's an interesting point, that you have potentially not just the market of entrepreneurs and funds, but on top of that or around that, a bit of a community of people who really want to change something, like you, and that might be true then on the side of the entrepreneurs. And do you think that changes also the conversation that funds and entrepreneurs then are having?
Definitely. So maybe to give you an example, I think when we started raising the fund, I think we needed to explain some investors that this is a great opportunity to invest in, and to educate them actually about the opportunity. And now I think so many intelligent people and also good funds have moved into this area that you really need to fight for the best deals. You really need to bring a value add, and you need to position yourself as an investor to be helpful and to really do something and not just to have money. And I think that's a good sign. It means that more talent is moving and really ideas are competing. Yeah. So, and I think that sense of everybody gets it and big companies are built in their area and you see more and more traction, I think is a good sign itself. So I would say that's, in the last 4 years, it's that changed so much.
That is a really, really good sign indeed. So one of the concerns you might have on the investor side is that this is, even though people are excited, a really narrow sector to play in. Don't you sort of lose out on a bunch of opportunities outside that climate impact focus?
And I like the question. I do disagree because I think it's not narrow. As I said, it's like we need to change our way about almost everything, like how we produce energy, how we get around, how we build buildings, how we heat and cool them, what we eat. So it's rather broad, I would say, because emissions come from different areas and we need to invent new processes and scale them. And so to give you a sense, like in the last 2 years, we've seen over 8,853 deals or so, right? So it is
in that space
in 2 years, just us.
Okay.
Yeah, it's just really a lot. And I think that's encouraging signs. And so it is hardware and software and like it's so broad, from new materials to energy, long duration energy storage, to alternative proteins, to precision fermentation. So it's so broad and so many different things. And I love that all of these people are trying to make a difference with their inventions.
So that also may be a difference to the past. There was a first wave of excitement about clean tech investing back in 2006 or so, which then ended pretty badly for many investors, unfortunately. So looking back, people say both the 2008 credit crunch or the discovery of shale gas were factors that really put a lot of pressures on companies. And the whole thing was very focused on solar energy and electricity storage to a smaller extent. What I'm hearing from you is that this time it's different because it is basically any industrial process that could be rethought. So it's not just solar energy.
Indeed. And I mean, I think the comparison is fair. It was also the first wave of internet companies, right? We've seen similar behaviors. I think when it comes to what we're talking about here, the problems we're facing, they won't just go away. So it is clear that we need this innovation and we need to have it at scale. So the problem won't go away and we need to find solutions to it. And we also need new innovative solutions. We need to scale the existing ones, obviously. But if you, for example, look into the space of carbon removal, it's something which, I don't know, seems for us a bit far-fetched and far out. I'm in Switzerland. Lots of people will know Climeworks, but in the latest reports from the IPCC, there are huge amounts of negative emissions which need to occur, right? And they're also already built in these models. And that means that we need to build up the capacities to actually remove large quantities of carbon, not only through nature-based solutions, but also through technical solutions.
So basically, the policy wonks at the IEA, they already factor in sucking carbon out of the air and storing it somewhere. So and even though that, we really don't exactly know how we're going to do that at the scale that is modeled. Is that what you're saying?
Yeah, that's what I'm saying. And we don't, like, for example, if you even if you would kind of plant everywhere on the planet forests that would kind of absorb 1/3 of the emissions, but not everything, right? So we need different solutions coming together. It's not an either-or solution. It's really an and. And if you look, for example, on the nature-based solutions and in Europe alone, there's actually a small decline over the next decade forecasted in the amount of carbon that can be stored in the forest, since global warming is kind of is changing the landscape of plants that can grow in different spots. And so we actually lose some capacity of carbon storage in Europe. So we really need other solutions as well.
Are you currently invested in a company that looks into carbon removal?
Yes, both nature-based, and we just invested in one company which has a new electrochemical process. It's not published yet. We're going to publish it in, I guess, 1 month or so. Yeah, so that's the space we're also looking into. And then carbon removal is also interesting twofold, maybe to combine it with the shipping company, the methanol, that you still need carbon kind of to produce that synthetic fuel. And so that carbon needs to come from somewhere. It could either be captured carbon or from organic sources. And so it basically, keeping the carbon in the loop and getting it out of the air again is something which is super important, as well as then permanent storage and sequestration to store it underground somewhere safely. So both of the things are needed.
I see. So you could either recycle the carbon or lock it away, depending on
exactly
what makes more sense. I'd like to get back to the statement you said that actually it's becoming quite competitive, and that the funds need to demonstrate, how they will add value. So how do you think about the value that Planet A brings to the table? How do you pitch this to entrepreneurs?
Yeah, I mean, for me, it was good to have been an entrepreneur before myself, and so to really know both sides of the equation. And so we support actually in 5 areas. So one is fundraising. Obviously, we're typically the first investor in new cases, and all of the technology we support, they require huge amounts of capital along the way to scale and to really bring this idea to life. And so making then relevant connections for the next funding rounds when it comes to equity investors, but also we pay a lot of attention to also debt, because lots of the facilities require so much money and that you want to get debt into the equation as early as possible, which is not straightforward because obviously the companies are not profitable yet. And so find settings where you can blend debt and equity together is something which is important for our companies.
Can you just clarify before you move on to the next points, the reason why so much capital is needed?
Yeah. So basically, maybe one success story here is like there's one company which is called Traceless, and what they're doing is they're doing plastic substitute made in agriculture byproducts and like secondary waste streams, which can utilize to make plastic alternative. And that plastic alternative, if you throw it into nature still recognizes the structure of the plastic substitute and can decompose it rather quickly. But what you really want to do is like you need to build bigger factories in order to produce large quantities of this material, which then can be progressed later for other people. But you really or quite often you need to build things which, traditionally look like oil and gas chemistry, like big facilities, right? So it is really capital intensive to build that. And if you give away shares each funding round, then you give away quite a lot of the equity as a founder. And whenever you can get credits in there, it does make sense. And to blend that as early as possible is what you want to achieve.
I see. Because the business requires brick and mortar installations, right? You have to build stuff and you have to build big facilities and that even, all before you know 100% that this is going to work out. So that is the trick and also the big difference, I suppose, to a software company where
Exactly.
you need very little.
Yeah, scaling is super expensive when you do hardware, and you can't just go from lab state to kind of a big production facility. You need to run through these iterations, and these iterations need time. There's still risk attached to it, but this is what you want to do, and you want to do it as fast as possible. And we're basically looking at this scale, or that's the technology readiness level, which is comes from the moon missions. And so basically it goes from 1 to 9. 1 was, okay, we have the idea to fly to the moon. 9 would be, we've been flying to the moon and came back successfully and we could do it again. So basically a proven technology. And basically this uprun of technology readiness level is something we want to see, that you get higher step by step. And at a certain point, banks are also willing to take risks when they see it's a proven technology, and the risk goes down. And we are obviously the guys who take a lot of risk in the beginning, and then you want to transition to also classical financing instruments.
Right, and so that's one of the things that you say we can help with that, squaring that circle. I think it's and because that can also be a skill, I suppose.
It's and you see, I mean, scaling one of those companies, it's not a technical challenge alone. It just needs also a lot of financial engineering and connections and all of that, which isn't straightforward. And so, to build up the expertise, be helpful there is one. Another one would be corporate introductions. And for example, in the case of Traceless, they've been managing to raise 36 million to build this facility now. But one of the reasons they've been managing to get 80 million debt in it is because they had offtake agreements for the next 3 years of the production, which is not existing yet. But this actually then gives the banks the confidence, because they have full order books, obviously, and that makes things more secure. And so corporate introductions are important, that you have these offtake agreements in place. Then talent would be another one where we help to bring in senior talent in the beginning, because we invest quite early and have good access to talent. And we have one person dedicated to that in our team, which is really helping there. Then another one would be branded communication. So for example, you want to get them on the right stages, on the right conferences and the right media. One nice example is like 5 of our portfolio companies. There's a camera team following them the next 3 years. And it's probably going to transform into a Netflix documentary, which is nice to kind of expose these ideas to the wider public. And then last but not least, it's that we help with impact and ESG reporting. So the life cycle assessment, which we do, is an external piece of evidence that they're really doing the difference that they said they're going to do. But these processes obviously change over the course when the time when the company is developing. And what you want to do is what we are doing is that every year we revisit our initial calculation, the mass and energy balances, and update to the new standard. So it is up to the life cycle assessment. And we also publish those. So you could go to our website right now, or lots of our portfolio companies are using it when they're doing a sales pitch, that they refer to the life cycle assessment to prove the difference they're making.
On this last point, maybe a small detour, but given that I've worked a lot in the ESG space, where you have all these reporting guidelines and you have regulation coming, for small companies, I feel it's often not a very good idea to try to tick all the boxes and do this 360-degree reporting and all the things, most of which aren't going to be particularly relevant to their specific business model. Usually small companies that do something very specific, and there's the question of whether that one very specific thing really, adds something that's of value to society. So I imagine you will be going after that specific thing, right? You don't look at everything, but you look at the product, you do the life cycle assessment of that product, and I would imagine that companies are quite happy to have something quantified, something well done that they can use to justify that what they're doing makes sense.
Totally agree. So, but I need to say we've been the first Article 9 VC fund in Germany, so we need to report on more things as well.
I see.
But I think how you framed it is exactly right, because I mean, ESG is in large quantities, I think, a tool to think about larger corporates that they are in a good transformation path for themselves. And I think that's good. The companies we are backing, like we think about them as like the winners of this change, of the transformation, and they're bringing up completely new products. So it's not so much about the company itself, it's more of what effect would that product have in the wider world, what processes it would substitute. And the biggest change comes from that, not by them lowering their specific energy demand, which is good anyway.
Mm-hmm.
But it is really how they transform whole industries. And that's the category of players we're looking to find. Yeah, that being said, we do both, but I would consider ESG and Article 9 kind of at the foundation of what we do, but we're striving with the lifecycle assessments to find the winners of tomorrow that can change whole industries.
Almost in some sense, it's worth investing a little bit of pollution in order to get a new technology that then saves a ton of pollution.
I think you can't, like, innovation is like you need to go and to try out things. And obviously, I mean, everything we do in a lab is kind of polluting in the beginning more, but you're working on something big, which then substitutes whole industries. And so, I go with your judgment there.
What is the role of government policy for the success of your investments? Is that sort of baked into the outlook that you take of the companies financially, or are they do they stand independent of that to some extent?
Yeah, good point. I think you need to frame it you need to look at it from different angles. I mean, one, obviously, with the Green New Deal, other initiatives, you want to describe transformation paths for different industries. And that it's important to kind of create market security. For example, there is mandatory drop-in quota for aviation, for sustainable aviation fuel in Europe. And that then creates a market. The same for shipping, same for plastic directive or battery recycling, all of that. And so that will be one argument to kind of have a clearer outlook how markets develop and what is needed. And maybe build on that. Also, government has power to buy things. So procurement programs can be good to say, look, but then I think a bigger one is how do we get things off the ground which are not viable in the beginning and where the risk is unknown and scaling. So, for example, one instrument which has been quite successful in the past, when you look, for example, at Northvolt, the battery manufacturer, is loan guarantees. So basically, something is too risky for banks. They can't, they don't have the guts to really invest in it. And then the government is taking that risk, and therefore it suddenly becomes bankable, and then it's scalable. And then you create this track record of, hey, actually, they were able to pay this back. So then you have the credit history, and then it can be done again, or it becomes way easier to do it again. So that's also sort of instrument. I think there's a variety of different instruments, but yeah, so maybe to just name a few.
Yeah. So I hear you saying that, yes, to some extent, government policy is very important in giving some signals. Where is this going to go? And, fairly specific things like certain trajectories for which fuels are going to be used in which quantity. And then there's going to be a market. And then that's more of a sort of demand pull strategy. The other one being more of a, innovation push strategy where you take out the risk out of some of the companies. And that's something that has been done in with Northvolt, as you say. Is that what you're saying?
Yeah, it has been done there. Yeah. It's been also done in different cases. And I mean, obviously, there are also grant programs or investment funds as other methods. And I do believe that the risk guarantees is actually quite a good method because it's relatively cheap. You only need to pay it if it goes wrong. If it goes to plan, then you save a lot of money because then the money has been coming from private banks. And so I think we need to be aware that public money obviously is limited and that we need to be super efficient with this public money and how to de-risk and accelerate this transformation and then find these ways where you can do a lot with not so much. So that would be a good example. But then also, for example, we have the sovereign Danish Wealth Fund as an investor in us, and so that sort of stuff is also important. Or you back emerging managers which are new to the field, which is also important. So lots of different things, I would say, and all of these actions are super important. But we need to be efficient as well. So we don't have endless money to spend, obviously.
Yeah, and also there's a degree of risk in that. Then, if the political environment and priorities change, then, the business case may look different for some of these technological innovations that are, at least in the beginning, still dependent on some form of subsidy or support.
True.
How do you think about that? I mean, the world clearly is changing as we speak. Is that a cloud a little bit on the horizon that you worry about?
Well, we see super positive developments in our portfolio of how the companies are going and how successful they've been raising their follow-on rounds. So it gives me quite a bit of confidence. And I mean, I think the general thesis of that future economy needs to be in line with the limited resources we have on this planet. And that holds true, regardless if we want it or not. But I think it needs to be aligned with those, and we need to come into that area. And so I think obviously I worry about also other signals, but what I can see in my day-to-day is super positive. And it's picking up momentum, talent is going in. And then there's also lots of innovation which doesn't require public action, which are just innovations which are more energy efficient. I mean, look at solar, other technologies that have proven themselves. They're just being deployed. And I think we will see that in more areas where we don't have kind of any discussions anymore what is green or what's not. It's just the cheapest, best alternative. And I think that's the best compliment you can do, that you get these technology to a price scale where this really does happen. And on the other side, I think what also we need to consider is we have all these really, really good universities, and now we have enough early stage funding. And so basically is renewing the industry in Europe and giving it a chance to kind of that we have this stable big companies also in the future. And there will probably be different companies than today. And I think for us as a societal outcome, I think we have also a huge interest that these companies are built in Europe, I would say. And therefore we need to pay attention that this innovation is coming from here. I think the ingredients are all here, but we need to double down on it.
You just need to put the pieces together. Yes, it's clear that you don't always know beforehand whether an industry or a technology that today needs governmental support will tomorrow be a really large industry that's just competitive on its own. Yeah. So these things have happened in the past. It's almost like industrial policy that from that perspective and it's fine perhaps if a few of them don't make it, but if one of them gets big, it totally makes sense from a governmental point of view to support the ecosystem that brings forth innovation. And also, I think to your point, not just the innovation in terms of the novel idea of the novel concept, but also the scaling and really sort of the proving it does work and driving down costs in production and really scaling it.
And we've seen us missing the boat when it comes to big tech companies, obviously, right? So we've seen now we're living in a world in Europe where the big tech companies are not here in Europe, and kind of that is dominated somewhere else. I do believe.
Well, you tried at least.
Well, yeah, I tried. Maybe I could have done better, I would say. I mean, still proud of what I built, but don't get me wrong, but the big tech companies are somewhere else. And I think we need to acknowledge that and think if you look into the future, I think now everybody gets it that is a risk for Europe as well, not having access or not having these companies within Europe, the big tech companies. And maybe reframing it, I think the conditions to have this green transformation winners here in Europe is generally good. We have the knowledge, we have the people, we have the capacities here, but it's not given that these companies are built here.
Yeah. What are things that you think could be tweaked to make that prospect even better, to have some of these successful companies in Europe?
One big challenge is to come out of the lab and to be at an industrial scale, because as you said before, investing into brick and mortar is and machines and everything is not what we see like us then like anymore. And the banks say, look, it's too early, it's an unproven technology. And so I do believe there's something missing in the middle to go this step from equity to debt in a good way. This is why we're putting so much effort at Planet A to kind of guide this process. But I think there's so many new technologies which right now being invented but need to be rolled out quickly. And only if they're rolled out quickly, they actually make a difference for what's the bigger problem. Like, we're not living in a world within the planetary boundaries. We need to get there. And only if these technologies scales and replace processes and products that are now part of our existing economy, only then it does move the needle, right? So, and I think getting there is what we need to focus on to renew the industry and the processes and to get to scale.
Now, if we think back towards more the really venture capital space, leaving the governmental policy arena, perhaps, there's also this fact that there is more venture capital in the US than in Europe. There's just more funding to go around. But do you think this is a bottleneck? So do you think, to put it in a question, do you think with more risk capital directed at climate tech, we would have more and faster innovation in climate tech? Is that currently really a bottleneck?
So I would say early stage has grown the amount of capital quite a bit, but later stage it's not as much in Europe. So back then, when I was raising for my company 25 million 2015, it was clearly that this money is not coming from Europe. It was clearly the case that this is coming from the US. We've gotten better, don't get me wrong, but I think we need much more. And also, in this ecosystem, it's not alone, right? So we need the corporates to sign offtake agreements also to go forward. We need the policy. We need to look at all the different parts of this. And so this innovation is not happening in isolation, where in software companies, sometimes it's like you find your business model and you can scale, you're happy. This is more complex. And if you're buying your way or you're innovating your way into the normal value chain of existing processes, and this is then also play of big industries and how they adapt to it and how they're willing to experiment. So it is more complex, but getting back to your question, I think growth capital, we need much more. And also, I think, the funding of this first of its kind facilities, like first big industry application, this is something we need to get better at. Because then in a second or third, banks are happy to take the financing because the technology is proven, the technology readiness is higher. So there's a better argument. And at the minute, it's more like seen as the risk is unknown. When the risk is unknown, banks don't generally like to invest in it. And I think we need to fix that. And that's not only a matter of just throwing more capital at it. I think it's also an idea of throwing more intelligence at the problem and understanding it better and de-risking it better than before.
What about then the role of existing corporates? Wouldn't perhaps they sometimes be in a very good position to, try a novel process that is unproven, but they have the credit worthiness, so they don't have a problem getting credit?
Yeah.
Why don't they do it? If that's the story, that they'll, everything will be completely different, they would want to be part of that different economy, wouldn't they?
Yeah. Why is Tesla not built from an existing manufacturer, right? So it's this repeating question: why is innovation coming rather from smaller innovative teams than from the incumbents? And I think it's just all the companies we're seeing, we're backing, is like they throw everything at that one idea, and either it's gonna work or they go in dust and flames and it's not gonna work. And I think this huge risk taking is something where startups are just better at it. I would love corporates to be better at it. But in fact, if you look in history, quite often they are not, with exceptions, obviously, but most of the time. You need a different mentality, a different working culture, and innovation you're really betting on, and startups betting everything they have on this one idea, on this one breakthrough. And I think it's great, but like, obviously, it doesn't really matter from which angle the innovation comes, which kind of helps us to live within the planetary boundaries. And I think it's not an either or decision, but historically, smaller teams have been better in innovating faster. And I think we should acknowledge that at least, but that I'm happy for any corporate which is innovating as fast. Really, I am.
Yes, I wholeheartedly agree. So this goes out on a call to all listeners who work at a large corporation. By all means, go for it and try something new.
And that could also mean that one technology is then adapted by a bigger one and implemented in the process, right? And then it's fine. Like this could also be an innovation path, right? So it's,
Absolutely. I think in general, what I like about this space is that if you think about the problem this way and with this innovation lens, then sustainable finance is somehow less about constraining yourself or excluding certain things that you don't like. It becomes more about risking something for the future, right? And it's a really different lens. And maybe that's something I would like to touch upon as well. So for the regular investor, retail investor, it is very difficult to be part of a VC fund. Although I think, and of course, there are good reasons, of course, why you want to protect people from high risk investments, that it is very risky. At the same time, my view is that probably quite a few investors who have a strong feeling about sustainability would be very happy to allocate maybe 1%, maybe 2 or 5% of their assets to a climate venture capital fund. And, they wouldn't be ruined if it went wrong, and they would really enjoy being part of that and risking some of their money to try and make an innovation happen. How do you feel about crowding in retail investors in this space?
Yeah, no, I first would agree. I mean, first, I do agree it's risky, right? So it's huge bets. Also, the beauty of doing that is you build a portfolio model, and so you model in complete losses, and then the strategy is that you find these outliers then that make the whole portfolio thrive, and that gives you returns. And if you as a fund manager do a good job, then a lot of these outliers, and then you can deal with complete losses because the growth rates of those companies which perform well lead to really good performance of the fund. And I think modeling risks is super interesting and this, right? How can we have a quality of money which is able to take huge bets and huge risks and to really enable those technologies to exist in the first place? Because that is, I think, the huge positive on that. You're helping new technologies to come into existence, but otherwise they would not. And so that's exciting. And obviously this is as exciting for retail investors as for institutionals. Yeah, you need to be a really good informed investor also as a private, but also the traditional performance of those has been really good. And so I think in some ways you're also blocking private investors to participate in the good returns of that. And I think that's also not fair, to be honest. But yeah, obviously what we do, like generally venture capital holds the potential to have complete losses, which you need to put into account. And so you need to be an informed investor to be able to place your bets. But I agree that I think it would be nicer if normal people, and not only privileged people that kind of invest 500K or more into a fund like ours, could benefit from what's happening here.
Yes, I wish so too. I mean, your fund is registered as an Article 9 fund, so that it has one of these labels. I suppose you would need to in the market for sustainable funds, but it is available only to qualified investors at the end of the day, isn't it?
Yeah.
What's the ticket size, if you can share that? How much money do you have to start?
Yeah, it's 500K. So in the first fund, we sometimes less than that. But yeah, but the nature of it's like you don't pay it like at once. We do capital calls like whenever we do invest, and you ask people at pro rata to contribute. Because for us, obviously, it wouldn't be good to have our fund, it's 160 million, and we don't want 160 million sitting in our bank account and waiting to be invested. Then the performance won't be as good. So we only draw the money when we need it. That's how you do it.
Yeah, but you have to have it when you call it. So unfortunately, I'm out. Yeah. Okay. Yeah. And final, so what about the ideas? So do we have enough ideas and entrepreneurs, or is that also a bottleneck?
I think we have enough intellectual property in Europe. I think when it comes to transform that into a viable business, we have a couple of bottlenecks. I think the innovation itself is as important as the commercial part of it. Like a good founding team consists of the science part, but also the commercial part. I need you to find those two pieces, because a significantly better idea only makes a difference if this idea comes to scale. And because only then it's changing our existing economy. So I would say there's a bottleneck. It's not really like we acknowledge the problem, but I think it could be better in transforming initially into startups. And then running up that path is like, I come again to this hardware finance, first of its kind facility gap, I think is important. If you take a step back, it's like we pay so much money for having great universities, which I think is awesome. And actually this part where we can build meaningful companies, we're falling a little bit short still. And I think we should leverage that better for the whole of society, for the future industries. And I think we have that huge potential. And I think I sometimes feel like, I can now speak for Germany, it's like we have these big corporates and we kind of sometimes look at them as if they've been around forever. But there was a time these started as well. And I think and now we see clear signs of not all of them surviving. And so I think it's about renewal. It's about having new ideas which come to scale to build this future of our economy. And to secure the wealth, and that in line within the planetary boundaries. And I think I sometimes tend to see people putting startups into the bucket of, it's nice to have, but that was also true at some point for the Googles and Amazons and others. And I think we need to see the potential to really build meaningful, large companies out of those startups. And I think that will happen. Hopefully it's going to happen here and not somewhere else, but it's going to happen anyway.
Yeah, and soon.
Yeah.
Thank you for a wonderful conversation. We've, taken note of your trip to Asia and how you found your motivation to, invest yourself in trying to solve one of the hardest problems we have, being climate change. You've told us how the scaling part of those ventures is sort of the circle to square. We want to replace existing industrial processes. Industrial processes need material, they need facilities, that in turn needs money, and that's hard to come by if things are unproven. Very interesting how you operate in that space, and kudos for having already left a significant mark with some very nice and successful portfolio companies in your fund, Planet A. If you now fast forward for a decade and close your eyes, maybe what is kind of the world you'd like to see?
I keep on stressing it too much, but I think I would love to walk through these factories and see them in action, pumping out new products which are really significantly better. And that you see this new industrial space where it's not polluting anymore our planet, where it's rather like in line with the planetary boundaries, and we see that at scale. And I would love to see that. I would love to run around and witness that. And because I do believe that we can build this, which is not harming our planet too much. Yeah, I would just love to ride on my bike through kind of an industrial space and watch it for all of the different facilities and walk through them and see that in action. I would really love that.
Nice. Yeah, so just a bunch of factories just without the smokestack there, but they're really busy and productive. I can see it. Yeah. Right.
Without kind of like being afraid that you're doing sport there, but maybe you can do your road bike race through that, and that's all right.
Yeah, great. Lovely. Thank you so much, Fridtjof. That was a wonderful conversation. Thanks for sharing. I wish you the best of luck with what you do. And yeah, have a great day.
Thanks so much, Jürgen.
Innovations in Sustainable Finance, a University of St. Gallen podcast by Julian Kölbel.